Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as we view the Australian dollar from a weekly time frame, we can see that at present we've got a Marubozu candle, which is relatively quite negative in terms of how the candle structure, as there's hardly no wicks, and therefore from the close, or should I say from the break that is, of 72.25, although we haven't had the close yet from New York, still holds to a bearish course and looks towards 71.70 as we're now challenging this level, or even lower down to 71 to 70 cents, where I've outlined here on the weekly. The 70-cent level is very significant and very major. So this, see how the market plays into the European session, but we are still quite heavy from a weekly and also from a daily, with the ADX trending with both the weekly and also the daily. The market is likely to see further negativity due to the US dollar index, which has nearly claimed its target now of 93.60 after posting a fresh high of 93.49.5. This has seen the euro push now further to the downside and now looking at 116.1025 from a weekly outlook. From a technical, we can see that the market is very much holding to a bearish trend, and along with that, with the dailies also holding to a negative bias. Reassess from 116.1025. The minutes that started all this, that triggered the basic move for the US dollar index, indicated that most officials believe that the economic recovery has advanced enough that the central bank could begin the tapering process sometime this year. The minutes from the US Federal Reserve policy meeting last month showed that the Fed officials discussed the idea of beginning to taper the Fed's extraordinary support for the US economy later this year, and the minutes noted that the economy has reached its goal on inflation and was close to being satisfied with the progress of job growth. Since the July meeting, there has been growing support within the central bank to announce tapering in September and begin it in October. However, the minutes didn't show officials arriving at that consensus about exactly that is when they should begin the tapering process. But the bears pretty much are out there for the euro and also for the Aussie, as the bulls keep pushing the dollar index now above 93.60. We're only like 15 points from there, or 20, and that is we could see 94.40.50. That would easily see the downside target reached and reassess, I say, 116.1025. The dollar yen was a little bit whippy as it took the challenge to the upside and hit a wall of resistance around that 110.10 level. Now, from the rejection, does question whether the market has actually found a bear camp, and it is a little bit apprehensive on the challenge. Technically, though, I would say that we could see one more test. The support comes in around 109.65, and let's see if the market does take that challenge back to that top side, where the bears are still likely to be harbouring. Well, the pound has crushed the level of the supports as we fall further through 137.15, and now as we're just getting through that level, views an extension down to 136.50. Let's see if the market has enough momentum to challenge that region. Technically, though, you can see here as the dollar strengthens right across the board that the markets are in a little bit of a spot when it comes to the bear case. Sterling yen, a little bit whippy, but still on course to its downside objective. There has been a few numbers on the way down, and I've moved, or should I say extended, from 150.75 as we're now heading down towards 150.05, or even lower to 149.2025, where I've outlined it here. Very choppy price action, but keep an eye on this pattern here. We've got two dojis, and if we end up seeing a third, which is a tri-star, could be pretty much to a bear case. It's interesting to see that the market is still trying to take that challenge high through that 1,800 level, but with the dollar strengthening, can only view the fact that we should see a pullback to 1,765 and reassess from there. Finishing up with oil, well, the market's crushing supports, and now through the level of 64.70 exposes a region of 61 to 62. And as we can see here, we're very much on track as the slide continues with an ADX strengthening to the bear case, We are oversold though, but the MACD is still holding in there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.